everyone. I hope you are doing well in these fantastic times. Welcome to the FF Virtual Arena. I'm your host, Ali Paterson from FF News. I'm going to be your host today. Today we're going to be taking a bit of a wee look at ethical AI, and for this, AI is quite a global issue, and we've assembled quite a global squad to look into this. First of all, we have got joining us all the way from Australia. We have got Tanya Kopytina. Tanya, whereabouts in Australia are you, and who are you? What do you look after?
Thank you so much. My name is Tanya. I'm based in Sydney, Australia. I'm a fraud consultant at ACI Worldwide, a global real-time payment software company. My main focus and my main daily job tasks is to protect our customers and clients from emerging fraud trends and threats and any risks that could be associated with the introduction of the new payments technology to the market. I've got several years of experience working as a fraud analyst within the banking industry in Australia, and I'm particularly passionate about automation, advanced analytics and machine learning, and how it all can be applied by financial institutions to address their current challenges with fraud and scams.
Fantastic, excellent. And now joining us from the Netherlands, we have got Gürer Kural. Did I get it right?
Yes, that's right.
Excellent.
Thanks a lot, Ali.
Gürer, who are you, and whereabouts in the Netherlands are you, and what do you look after?
Yeah, I'm participating from Utrecht, Netherlands. I am an analytics consultant in Rabobank, and I joined Rabobank a couple of years ago. And as an analytics consultant, I would like to describe my, role in one sentence like this. It's a strategy change and risk management consulting role with an analytics background. So that means I deal with the end-to-end analytics, pipeline and different strategical and risk-related roles and issues over there. And my main, focus areas in these days is ethical AI and upcoming AI Act, its implementation, and all the generative AI things going around the world, to be honest.
Have you seen this thing? I don't know if it's been in the news a lot. Have you seen ChatGPT? Is that something that you've
I
might
think
have come
it's
across?
something a bit popular in these days. Yeah, I think I saw it. I've seen it, yeah.
I'm sure that will come up during the conversation. And rounding out the panel, fresh from his debut on the Fintech show, we have Ash Booth from HSBC. Ash, what do you look after? And just tell us a wee bit about yourself.
Yeah, good morning, good afternoon, and good evening. Yeah, Ash Booth, thank you for inviting me. So my official job title is Head of Artificial Intelligence for the Markets and Securities Service business at HSBC. What that really means is working with our trading, sales, structuring, quant research and operations team in our markets business to, through the use of AI, facilitate better risk management, intelligent automation, and customer service for our capital markets business.
Excellent. Well, I wanna set the scene first of all. We're talking about AI, and it's a term that gets bounded around left, right, and center. It's kind of evolved from a fancy if this then that, and now we have generative AI. So I'm gonna throw this open to whoever wants to come in first with this. How would you define what AI is, and within that, how would you sort of view what ethical AI is?
I don't mind jumping in on this. I'm sure lots
Absolutely.
of us have opinions on this one. It's always, as much as we've been talking about artificial intelligence since the 50s. I think it's fair to say we're still not agreed on an exact definition of it. But a nice loose one that many of us like to use is that really it's a field of computer science that focuses on the development of machines that can think, reason, and perform tasks that we typically think of as existing in the human domain. So things that we would imagine humans usually do. So in order to do that, it tends to encompass different technologies like machine learning, natural language processing, computer vision, or even robotics, which is having a bit of a resurgence. Now, generative AI is still, it's part of that subset of academia, but it refers to AI systems specifically that create new content or generate new ideas based on data they've been trained on and a prompt that's provided at the time of use. So the advancements that we're seeing in that space, and as well in more traditional machine learning and other areas of AI, for us in financial services are enabling better decision making, improved automation, and more personalized customer experiences.
Yeah, I totally agree with Ash and your definition of AI actually. Unfortunately, I cannot provide one-liner definition of AI because it depends on the audience and the context that you are describing and discussing AI. Let's say right now we are discussing AI in a TV to a broad audience, to everyone in society. Probably we will be talking about generative AI in these days, like ChatGPTs and everything. A couple of years ago, it was AlphaGo that beat Go Masters, and maybe the ancient AI was the Deep Blue that beat Kasparov. That's what we think about AI in society. But if you ask the same question to a, let's say, professor or group of professors, they will say, okay, AI is neural networks, reinforcement learnings, and all these complex machine learning algorithms. And if you take a next step, ask it to, let's say, data and analytics professionals or people that train in this area, they will say, AI is machine learning basically. So they will say classification is AI, decision tree is AI, these kind of things. And I will take another step and ask this question to a governmental organization, a regulator or a policymaker. And then they will say, you know what, pretty much everything is AI, all statistics and everything. And I can understand their reason because they want to be inclusive and they want to be risk averse when it comes to putting a policy or establishing a governance around these kind of things. And they put their scope broader than everyone. It's understandable.
This is definitely something which is, got a feature-length film off the back of it. Tanya, I just want to touch on a little bit around your expertise around payment fraud. What are some of the common types that could be addressed through utilizing incremental learning, and what forms are typically encountered by institutions that could be better migrated using incremental learning technology?
Mm-hmm. In my view, incremental machine learning technology is a very effective way to address all sorts of fraudulent activities that banks and financial institutions face today. I will probably provide a few examples for what types of fraudulent activities that exist there, right? So the first one is an account takeover fraud. This is type of fraud when criminals, fraudsters gain access to the customer's account or internet banking detail with the purpose of making unauthorized transactions. Another big type of fraud is card fraud. So that could include card not present fraud or just card present fraud, which would be the use case of the stolen or counterfeit cards. And that would be the result of online data breaches, some points of compromise, PIN attacks, card testing events, or ATM skimming. And the last but not least, very, I would say, growing type of fraud is scams, whether it's a phishing or social engineering scam. That is type of fraudulent activity when criminals will try to trick the genuine customers into providing fraudsters with sensitive details, whether it's information about their personal details or login credentials. I would say the main benefit of why we would like to use incremental learning technology as a fraud detection is that technology enables us to analyze large volumes of data in real time and to identify those fraudulent patterns as they emerge in real time.
We did a report with in the US around their modeling and utilizing data that they were bringing in. And some of the data that they were bringing in was racist. There's no kind of two ways about it. And so they accidentally taught a loan authorizing machine to be biased based on the previous data. So what type of data is needed to train machine learning models so that the organizations can really ensure that the data is reliable and unbiased?
You can train machine learning models with several different types of data, like tagged data, untagged data, or unstructured data. And it's also, let's say, possible to direct your data directly into your model without any filtering. then it causes a problem like that, as you mentioned. You end up with a racist model, or you can put a reliable monitoring mechanism and data filtering, data control mechanism in place, so that make sure your data input is reliable. That's one thing. And the other thing is, I would like to say, how do we define bias and this discrimination is a bit challenging sometimes, because if you define bias in a term that we use in the society right now, it's like an unwanted discrimination, like discriminating against one race, one gender, and so on and so forth. But in modeling and statistical terms, bias is like being off the, let's say, origin, medium point. So that means my data, Netherlands data, is biased against UK data and Australian data. These kind of things will happen in data. But on the other hand, the unwanted bias, the unwanted discrimination, I think it's evitable, because first we can put control to make sure that there's no sensitive data in our models and our input data. Like we can ban all these racist elements, ethnicity elements, religion-related elements, so on and so forth. So that's one, let's say, gate. And the second thing is, and I think in the case that you mentioned that happened, is the proxy data points and the hidden bias, hidden demographics under those proxy data points. Because no one wants, let's say, racist model. It will cause a huge problem for them. It will be a bad reputation and so on and so forth. But intentionally or unintentionally, they use some proxy data points, like, let's say, zip codes. And when you use a zip code, when you take a look at the list of data elements that is restricted, you don't see a zip code. And you think that, okay, maybe I can use zip code. And when you use it, you see that it's a good indicator for your model. And everyone is happy. You share it with the stakeholders, you share it with your developers, and everyone's like, oh, that's great. We have something in here. And when you share it with authorities, or when you take a look at the reasoning behind it, you see that your model is racist because it discriminates according to a zip code. And in society, some types of subgroups in society lives in a similar zip code, because we are human beings and we like to live together with our own people, let's say. You know, I'm familiar with this culture, you're familiar with another culture, I like it, and I live together with them. Unintentionally now, your model is biased and maybe racist, maybe against one religion or so on and so forth. And I think
you hit on a really good point there, right? Like, yeah. I think it's well known in the practitioner community, right? There's so much you can do to measure for and mitigate bias, right? It's all about your sampling techniques. There's statistical fairness techniques like demographic parity, equal opportunity, equal odds, that are designed to measure fairness across demographic groups. But ultimately, it's about thoughtful and sensible governance around training and deploying of AI models, right? But look for things like these proxy measures. You need to have, especially if you're in a large organization responsible for making these kinds of decisions, right? You need to have flags that say, are you training a model based on protected criteria or personally identifiable information? Do you have these checkpoints in place that do these statistical fairness tests? Are you checking for proxy measures of these protected attributes? Can document that, prove that, monitor and measure it in real time, publish it to stakeholders. Like, it's really about thoughtful governance, because the statistics and the practices exist to make sure this doesn't happen. Where we see it falling down is when the right governance isn't in place.
Yeah, absolutely agree with what just Ash said, and just would like to add, right? So having maybe slightly unbiased data, that's one thing, but it's up to the data scientists to be able to interpret this data, right? To collect and to combine and aggregate the data in a way that helps us to generate some insights from the model development, right? If I come back to fraud, so what I would say that we need to have some fraud expertise to be able to aggregate the data in a way that we could gather some insights about the typical customers' trusted behavior, so we can compare that with the current suspicious or unknown activity, right? So that insights could be done with the data, but that's basically the beauty and I would say the art of machine learning model development. And another important point I would like to raise for with regards to the fraud detection and incremental learning is the accurate and consistent and complete fraud automarking, right? If we can provide the feedback about what fraud looks like to the system, our model would be able to generate better insights as a result, as a final outcome.
Can we? I want to talk a little bit more about data coming in. Look, I would give an analogy, but every time I've given an analogy about the sheer amount of data out there, it's out of date by the time I've said it, because it just keeps growing exponentially. There is so much data out there that financial institutions have to deal with. Do you think some of the smaller banks out there are at a bit of a disadvantage or an advantage to the sheer volume of data based on things like customer size? Ash, I'm gonna go to you first.
Yeah, there's so many different directions we could go with this. So I would say, on the one hand, yes, it's fair to say that larger financial institutions have more data available to them. And perhaps that's giving them an advantage in training larger or more widely representative machine learning models. However, bigger isn't always better, as I often say. Managing massive amounts of diverse data sets is a real tricky technological problem. So if I'm trying to solve a problem, whether that's capturing an opportunity or improving automation or whatever it is, I want to use the least amount of data possible and the most structured, easy to work with data I can to solve that problem. So I always come from a point of, let's create the simplest solution we possibly can. And most of the time, that means not using all the data that's available to us. So that's one side of things. But also, let's say there is an advantage to using massive amounts of data. I think smaller banks can also benefit from using machine learning focused on specific use cases where they have a competitive advantage, right? Or unique expertise, whether that's small business lending or niche markets. And I think as well, the use of machine learning, particularly on the commercial banking side, it's still relatively early, I think. And that there's still many strategic opportunities to acquire and amass data points for smaller banks. They could take advantage of this early stage by organizing their data better than some of these banks that have been around 150 plus years and have many legacy systems and have to contend with a lot of tech debt. Often they have the advantage there of building their data architecture in a AI first way, where some of the larger, older institutions have to catch up there. So I think there's pros and cons on both sides, really.
Absolutely. Gürer, with your data hat on, can I get you to weigh in on this?
I totally agree with what Ash said, because right now we think that the more data you have, the better will be your model. But I think this is wrong. The better your data you have, your model will be much better. I think that's the way. And I think when it comes to data, it's quality over quantity. That means a larger data sets that, like let's say international banks have, might be a problem for the developers as well, because most of the time you lose most of your time and effort to untangling this data. And with the smaller mid-cap banks, maybe it's easier because they will have less amount of data and they will have one solid case or solid database that they can use because they build it a bit early, or it's a bit neat, more neat than what we have in the larger scale banks. So I don't think it's a disadvantage, but on the other hand, it's also not a direct advantage, because the amount of data we have as a large organization can be an advantage for us to train better models and fair models as well. So yeah, when it comes to competitive advantage, I think it's a good thing to consider for a small or mid-sized bank rather than focusing on the whole total market. And I think that's how they can add value to their business model as well with the data.
Absolutely. Tanya.
Yep. I think it all depends on the use case, right? So for some of the use cases, there might be some things like too much data, but for others, it could be like simply not enough. I will give an example of the scam detection, right? So what I keep hearing from banks and organizations when it comes down to scam detection, they all keep saying that simply not enough to only have, let's say, authorization data that will come from the host system normally, right? So the reason for that is the scam and fraud is so different, and scams is usually would look like a genuine customer behavior, right? Because it's usually the customer who will provide some details to the fraudster, sorry. Could be the customer who actually logging in and basically being on the phone with the fraudsters and providing the fraudsters details about their financial details in real time. So it's very hard to distinguish scams from genuine customer behavior with the amount of data that financial institutions currently have, right? And I think one of the advantages that potentially large institutions have currently over the smaller banks is that they have access to the more advanced and sophisticated technology, right? So they could easily aggregate the data in a way they could basically enable some enhanced analytical technologies to prevent fraud in a more effective way. That is not to say that smaller financial institutions won't be able to get the same amount of intel and intelligence and insights from banks, right? So at ACI, we have developed a module that's called Network Intelligence Module, and that enables all financial institutions to collaborate, right? So when big bank could detect some fraudulent activity or maybe identify some point of compromise, they could share these insights, the fraud signals, what we call, with the smaller banks, right? And smaller banks can use that information in a preventative manner to detect fraud. That does not mean that we're sharing the private or sensitive information, so it's more like a mathematical formula or some fraud insights, but that could really help a smaller organization to fight fraud more effectively.
I just want to touch on based on that, and I want to follow up a little bit. In what way did this kind of collaborative approach to fraud, in what way does that facilitate an ethical AI practice?
Yeah, so I would give some examples, right? If we enable smaller and bigger organizations to share fraud signals, right? So it means that the smaller banks can build a more comprehensive and diversified data set. So they could utilize some insights that they simply don't currently possess. That could promote fairness and accountability, right? Because having more data means that their AI models would not alert on unfairly targeted audience, such as maybe like vulnerable customers or specific demographics, as we discussed today. Another point I would like to make is that it actually promotes transparency and interpretability, right? Because in the past, banks need to basically identify all those points of compromise or being attacks or basically online website where this data breach occurs. But now if the banks can share this intel between each other, they could use this intel in more direct way instead of like trying to basically get this information analytically or probabilistically from the data they possess. Absolutely. Yeah, so just to sum up, I think the approach of collaboration and use of incremental machine learning technology should really help all financial institutions fight fraud together as an industry, right? Instead of like just moving fraudsters from one bank to another, this approach could really disrupt the whole chain of fraudulent activity and discourage them to commit fraud, discourage them from committing fraud in the first place.
I like that. So it's not just, it's rather than getting your own defenses up and then fraudsters move from HSBC to Rabobank or whatever, it's that collaborative approach. The last thing I kind of want to touch on, I want to talk about some of the innovations in artificial intelligence that you're seeing becoming popular in the future. But what are some of the kind of the benefits for these that aren't as obvious? I mean, OpenAI, ChatGPT, it's incredible. I personally used it to get me out of a car parking ticket last week, which was absolute win. But on the kind of the nuts and bolts of financial institutions, what are some of the benefits that we can see from this generative AI, and what will that mean for the customer at the back end? Ash, do you want to take this one first?
Yeah, sure. There's so many different ways we could go with this, right? And the future is a long stretch of time. So maybe I'll focus on the next 1 to 5 years. I think in the next year or so, we'll see a huge focus kind of in the academic space, but also in the commercial space on what I'd call the agentization of large language models. So right now, everyone watching and listening will no doubt be aware we're seeing a boom in the power of generative AI, particularly large language models. And firms across the street are strategizing around what this new and powerful technology set of technologies means for their business models, how it could benefit both their top and bottom lines. Now, the way we interact with those larger language models right now is as if they're oracles, right? So human operators, us, will ask it to generate, summarize, or modify content. We're also seeing plugins or frameworks like LangChain, which effectively arm the models with some toolboxes that allow them to, connect to more recent sources of data or add calculation engines to do specific tasks. I think particularly in the space of intelligent automation, we'll see a shift away from this kind of oracle model where we ask back and forth and have conversations, to one where the models have a more agency. So while it's in its early days, we're already seeing tools like AutoGPT is one for people to look up if they're interested, that given a natural language goal, will attempt to break down that goal into a set of subtasks, and then using the internet and other tools in its toolbox in an automatic loop, try and solve that task. So it's less, question, answer, and more, how would I do this thing? And it breaks it down and tries to do it for you. I think the maturation of that paradigm will see huge advances in the intelligent automation space. Now, I'm sure the kind of interactive oracle question answer thing will make massive waves in the customer service space, as you might imagine, or in the marketing or content generation spaces. I feel like that stuff's an obvious leap from what we're seeing already. But that next wave, and that really significant and impactful wave, I think will be in the automation space.
Absolutely. Tanya, what are your thoughts on here? So I can see that on the content side. Are there any innovations in artificial intelligence that you think are going to become quite popular from your perspective?
Yeah, I think the use of automation, incremental technology when it comes down to machine learning, and that would really improve the operational efficiencies for the banks, reduce false positive rates, and also increase the fraud detection rate, which is like one of the key metrics for fraud detection.
Excellent. Gürer, I want to get your, the last thing I kind of want to do, I want to get your perspective as well. What are some of the innovations from your end that you're seeing becoming popular, and what's for these benefits maybe on the back end?
I think the main, let's say, change that generative AI will propose to us is the personalization, because right now the communication between a customer and a bank is either going through a human being, okay, that's personalized, or going through, let's say, digital platforms like chatbots. And those digital platforms, especially chatbots, are mostly based on if and else basis, so you will get the same thing over and over again, despite your personality or despite your question. But with the generative AI, I think it will be more personalized. And then these digital agents will understand the problem, will understand the person better, and then they will provide personalized answers to them. And I think that's the biggest improvement, or the most important improvement that I see in the back end and front end for the financial environments. Of course, there are other additional benefits that we can list, and it will be quite a long list, to be honest. But I believe the observable one will be this personalized customer interaction, at least in the short term.
Thank you all so much for taking the time to speak with us today. Gürer, thank you very much for joining us all the way from Utrecht and Rabobank. Ash, thank you very much for joining us all the way from, or just up the road from where I am right now in London. Tanya, thank you very much for, I can see that you are legitimately in Australia because the sun is set in the background behind you. Excellent. We'll put your guys' LinkedIn in the description if anybody wants to reach out. But thank you all very, very much.
Thanks, guys.